Module 4, the Buyer's Meeting. The previous module focused on reviewing the buyer's questionnaire and preparing for the buyer's meeting. In this module, we'll go through an example of the buyer's meeting. At this point, you should have thoroughly reviewed the questionnaire and done a preliminary market review to see what's available in your client's general price range. By doing this work in advance, you avoid going into the consultation cold. Some of the items on the questionnaire, like asking about hobbies, are great to use in opening the meeting and building rapport with your buyer. There are 6 steps in the buyer's meeting. Most are incorporated within the Core 7 Buyer's Meeting PowerPoint, so you can easily control the flow of the meeting and check in with the buyer by asking, "Does that make sense?" or "Do you have any questions?" as you move from one slide to the next. A copy of this PowerPoint presentation is available in the Core 7 Resource Center. I use this presentation with every client I speak with. Customize it as needed with your logo and specific information. Now, the 6 steps for the buyer meeting are 1. The opening, 2. Setting the agenda, 3. Introducing yourself, your team, and your process, 4. Clarifying what's important to the buyer, 5. Reviewing the buying process, and 6. Discussing the next steps. For the first step, opening the meeting, you always want to make sure everyone is comfortable. Offer them water or coffee, whatever's needed to make sure everyone is in a good frame of mind. Also, observe the buyers and note how they're acting. Are they happy, giddy, or nervous? Use their frame of mind as a guide for proceeding and the tone you should set. This is the really important rapport-building time, so you don't want to dive into the forms just yet. Conversation should be natural and friendly. Ask, for example, about what's going on with them, if there were any problems finding your office, etc. As a rapport builder, you may also want to present a small gift or book, especially if you found any information about their hobbies or interests in your online search. This makes a huge impact if you can do it. I like to open the meeting on a very positive note by congratulating the client and diving into the Core 7 introduction by explaining, "Mr. and Mrs. Smith, this is really exciting. Thank you for taking the time to fill out the questionnaire before meeting with me. Everything on the questionnaire is important for me to understand, so that when we start to negotiate an offer, we'll know what we can and can't negotiate." Now, as I mentioned on the phone, I take a different approach than other real estate agents. I work with either your Core 7 professionals or those I recommend to make sure real estate fits into your overall financial plan in the best way possible for you. And does it make sense? It makes me feel a lot more comfortable to get permission from my clients to introduce my Core 7 partners when necessary. From the get-go, you want to present the process as a positive experience and show them very positive energy to help put the buyer at ease. You can also make reference to the person who referred you to the buyer or how you found them. Next, you want to engage your client by asking, "What are your goals for this meeting and how can I help?" The typical answers you'll receive at this point are, the buyer wants to learn about the process, they want to figure out how you can benefit them, and obviously, they want help buying a home. Their answer lets you know what's important to focus on in the meeting to demonstrate value. Buyers will also set the tone for the rest of the meeting with their answer, because if there are divisions in their thinking, it'll come up. For example, one spouse may want a house that needs some renovations, while the other wants everything in place so they can just move in and unpack. You can have different types of couples as clients: married couples, unmarried couples, engaged couples, pre-engaged couples, dating couples, friends, and business partners. With any couple in a life partnership, it's common to have differences in expectations and priorities. For this reason, it's important that you understand the exact dynamic you're dealing with. It's your job as the agent to synchronize person A's feelings with person B's feelings and help them find the path forward. Using the renovation example, if there's a difference in thinking, the way I would do this is, "Mr. and Mrs. Smith, there's always a way to bring 2 positions together in a way that works for both of you. Maybe a happy medium would be something I like to call a plug and play, where appliances need to be replaced rather than a gut renovation. How does that sound?" This is a way to start the process of compromise. Once the discussion has opened, it's time to move on to the next step, presenting the agenda for the meeting. At this stage, I like to start up my PowerPoint, move to the second slide which features the agenda in bullet points, and explain the next steps to the client. Okay, let me tell you the agenda for today's meeting. I'm going to tell you a little bit about myself, my team, and my process. Next, we'll talk about your needs and review the steps of the buying process. We'll wrap up, making sure all your questions are answered and discussing the next steps. Now, throughout our meeting, I will ask if you have any questions. I apologize if it's redundant, but I want to make sure I don't miss anything that's important to you. Sound good? Now it's time to move on to step 3, introducing yourself, your team, and your process. Now, as we discussed earlier, these topics should be more strongly focused on if the client indicates on the questionnaire that they're considering other agents or hesitant to commit to you. This is the time to distinguish yourself and show why they should choose you. What I like to show at this point in the PowerPoint is the strength of my company and brand, market share, and any positives that set me apart. When customizing the screen about your company, focus in on the specific strengths and distinctions you have. You can underscore these items to the buyer by saying, for example, "Mr. Jones, I'd like to tell you about the strengths of my company and our market share. As you can see on the screen, ABC has been the #1 office in this region for the past 5 years." Take a similar approach when customizing the screen that introduces you individually. Cite specific achievements that set you apart, such as certifications, awards, or areas of specialty. How much time you spend on the topic depends upon whether or not the client is considering another agent and if a strong sell is warranted. Here's how I approach it. "Mr. Smith, I'd like to tell you a little about myself. I was recognized this year and last as one of the top agents in the region, and I work only by referral. I don't want to blow my own horn too much here, but I do want you to know that you're working with an experienced professional who has had success in the market. You can offer even more support of your performance through testimonials. Again, the amount of time you spend on them in the buyer's meeting depends entirely upon how strong a sell you need to make. Customize the PowerPoint slide with brief blurbs so they're easy to read. Add another slide to hold more if needed. For me personally, if a client is considering other agents, I like to focus on my testimonials and offer the opportunity to speak with my past clients by saying, "Mr. Jones, here are some testimonials from past clients I'd like you to read. I can supply you with their numbers, so please feel free to contact them if you'd like." If you have a team, the next PowerPoint slide is where you walk through your team's roles. It's very important to share this information up front to make sure clients know their needs are always in the forefront and to avoid clients feeling that they're being handed off at any point. Now, this screen and how you introduce your people needs to be customized. But as an example, I present my team by saying, "Mr. Smith, I'd like to tell you a little about my team so you'll know what to do during the process while we're working together. I'm the team leader. This means I oversee and am aware of every aspect of the process, whether you hear from me or not. We have weekly team meetings so that I'm always in the loop on every aspect of this process for you. Now, while I'm actively involved in the process, there are certain tasks that my team covers because they are more detail-oriented, while I focus on the big overall picture to make sure everything runs as smoothly as possible for you. I'm the front person. I do the negotiation for you. I handle the buyer meetings like this one to find out the specifics of what's important to you, and my team handles the other details and keeps me in the loop. The next person on my team is my transaction coordinator. She coordinates the process from start to finish, so she may be a better first call for any questions you may have about what's going on. Now, if you have a buyer agent on your team, the way I introduce that person is, the third person on my team is my buyer agent. He's readily available for showings. He'll be working with you and also reports back to me and my transaction coordinator so that I'm always in the loop during the search. The fourth person on my team is my marketing manager. She handles upkeep of my database so that even after you close on your new home, we'll always keep you up to date with the market using our resources. If you ever need a home improvement person, an electrician, plumber, or financial professional, we can provide you with that information, as well as helping you with updates on your house and sharing other programs we're running. We see our job as starting after the closing. We want to be the resource for all of your real estate needs. Next, you need to explain your unique Core 7 approach. The PowerPoint screen features the Core 7 client-professional relationship diagram to help illustrate. The way I like to segue into this discussion is, now, I'd like to tell you a little bit about my unique process. As I briefly mentioned earlier, and I'm not sure if your financial advisor, John Smith, told you, but I take a different approach than most realtors. I work with what I call the Core 7. All this really means is that we'll help you find the best house and the best way for real estate to fit into your overall financial plan. But I also have other partners on my team that, if it's okay, we'll bring into the process to make sure you have everything you need to make the best decisions for your financial goals. Now, I focus on doing the best job I can for all my clients in this way because I depend upon their referrals. Does that make sense? Now it's time to address the fourth step in the buyer's meeting, clarifying what's important to the buyer. The PowerPoint screen for this step, titled Your Goals, introduces the topic. But this is where your advanced preparation comes into play. Now, from the buyer questionnaire, you already have this information. But the goal here is to get the client comfortable talking with you. Up to this point in the meeting, you've done most of the talking. This is the time to let the client talk about their needs and for you to let them know you heard what they said. This is also an opportunity to catch something that may have not been mentioned on the questionnaire. The scripting I used to open this topic is, "Now, Mr. Jones, I've written down some of the goals from your buyer questionnaire, but I don't want to assume anything. Help me understand what's important to you about the home buying process." You should have compiled a list of what's important to the client and what they're looking for based on your review of the questionnaire. As the client tells you their goals, add the information to your notes. When they're done speaking, review items from your list with them and echo back what the client said. This is done to show you heard them. An example of the way I do this is, "Mr. Jones, I noticed from your buyer questionnaire that your goal is to move to a bigger house with more space for the kids. School means a lot to you, but you also want to be close to your work. You're looking to move soon, ideally before the new school year begins. Now, some of the important features you're looking for in your new home are central air conditioning, a backyard, and 2 bathrooms. You also mentioned that you like to have a home office. How does that sound?" Wait for the client's response to make sure it's correct, and then respond with an easy, soft closing script. If we can meet all these goals, would that make you happy? I know this sounds very basic, but it makes a big difference. Before moving on to the next stage of the meeting, discuss the keys to buying in this market to give the buyer some perspective. As shown on the PowerPoint slide, there are 4 topics to cover: pricing, exit strategy, value, and upgrade. In discussing price, the goal is to prepare the buyer for what to expect in terms of the cost for the features and location they want, and what that will mean in terms of a monthly payment. As an example, when a client's desired price range doesn't fully line up with reality, I like to address it reassuringly by saying, "Based on your questionnaire, your price range is here, but based on a quick analysis, to get the space and features you want in this location, I think we need to be in this range, which would be about $50,000 more." Now, I know that may sound scary to you, and you will address it more when you speak with the mortgage originator, but I like to give you some perspective on this. We have a rule of thumb that every $10,000 borrowed means about $50 a month in your mortgage payment. That $50 is tax deductible, so after taxes, it really is $35 a month. Don't get me wrong, $10,000 is a big chunk of change, but $35 a month is fairly manageable. Now, $50,000 will cost you another $500 a month, but it will get you the exact location and features you want. There are also different strategies to structure the mortgage that may make this the right price for you, but talk to your mortgage person for his thoughts on this. Do you have any questions? Now, by presenting it in a positive manner like this, you create some certainty for the buyer that the amount of money that they would need to spend to get the exact house they want can be made manageable with some budgeting and the appropriate mortgage structuring. It's best to address it right here because clients usually underestimate their buying power. This is also, incidentally, a good point to introduce your lender partner. I like to move the conversation on next by saying, once we find a property you may want to buy, my job is to do a price analysis to figure out what the property is actually worth. Then, we come up with a strategy to get it for less. This means using the comparables and also projecting where the market is. A good strategy to use in terms of pricing is to have your client visualize where the property's pricing will go in the future. If you see a 1-bedroom condominium is on the market for $375,000, can you envision that property selling for $399,000 or $425,000? You can't project what will happen in 3 to 5 years, but can you project whether or not a property has the potential to go up? Do you have to do some work to make it go up? All those things are a consideration in price, and it's important to coach the client to think things through. The next step is to move on to the discussion about exit strategy. This is extremely important. Statistically, the average first-time home buyer currently spends just over 3 years in their home, even though the intention may be to live there for 7 to 10 years. You need to let the buyer know that it's your job to worry about them, and that is why you're addressing exit strategy. Reassure them you'll be there if the unexpected happens, and they need to sell before they anticipated it. You can even introduce this jokingly by saying with a laugh, "Let's talk about exit strategy. I know you haven't even found the house yet, and here we are, already talking about selling it. But part of my job is to make sure you pay the right price and get a good value when you buy. If something changes in your life in the next 3 years, let's say for example that you get a great opportunity to relocate for another job, I want to be able to get this unit rented or sell it for you in short order if you need to move. If the questionnaire indicates a specific exit strategy need, for example, the client intends to build a real estate portfolio, meaning they intend to move out and rent the property, this is the time to address that. Using our example, the way to explain this would be, Mr. Smith, I know you'll be buying a condominium, but when you move out, are you looking to rent it out or sell the property? Based on your questionnaire, it looks like you want to build a real estate portfolio. Would you want this property to eventually be a rental unit? Now, one of the reasons I would address this is because there are times when the mortgage originator could show the client an adjustable rate mortgage for a lower payment. It might make more sense then because they will only be in the home a short time and plan to sell it. On the other hand, if the client plans to hang on to the property as a rental, especially if interest rates are low, it might be a good time to lock in a very low fixed rate because you're looking for the rate of return later on and don't want any interest rate risk. The next step is to explain value and why it's a consideration. Now, this is something that can have different meanings to different buyers. For first-time buyers, the value is that this is the most important purchase they're going to make. For move-up buyers, the value is that this is their chance to get more space and perhaps solidify where they're going to live for a while. If they're investors, value is critical to them because they need to get a stable return on this or get certain appreciation. For empty nesters, value is important because they're selling a bigger property and they're downsizing. They need to know they're getting good value because they're losing space. You want to tailor this discussion based on your buyer's situation. Lastly, always do your best to let the buyer know this move is an upgrade for them. You want to help your buyers move into a better space, no matter what their situation is. Whatever the reason for the move, staying focused on the positives, and there are always positives to any move, will help keep your buyers motivated to continue this process with you. Let me give you an example. For first-time buyers who are renting an apartment or living at home with their parents, moving to their own place is a big upgrade, not just because they own the property, but also in terms of their living scenario. For this buyer, the move translates to, I have my own space, I have a nicer kitchen, I can now grill in the back, I can walk to work, or I can take the train to work. Whatever the key factors are for your buyer, you always want to present this move as an upgrade. The fifth step in the buyer's meeting is to present the client with an overview of the home buying process. The goal here is to begin managing your client's expectations by first letting them know that the process is complex, but your job is to help them navigate through it. You also want to give them an idea of the steps involved. Along these lines, the way I like to open this section of the meeting is like this. Mr. Jones, I want to let you know up front that buying a home is a complex process. It's a major transaction with a lot of moving parts and can have frustrating starts and stops that are beyond anyone's control. The good news is that I'm here to help you navigate through it. I want you to think of me like an airline pilot and the process as a flight. There will probably be some turbulence and it might get uncomfortable at times, but I'm going to let you know what's happening every step of the way and get you through it safely. Now, I'd like to walk through the home buying process step by step to give you an overview of what to expect. Is that okay? Now, the PowerPoint breaks the process down into manageable pieces. But it's important, especially at this point in the buyer's meeting, to ask the client if they have any questions before you move on to the next screen. The first item to introduce is being prepared to purchase. This is the time to set the client's expectations by letting them know the importance of the pre-approval and that they'll need to provide a good amount of documentation up front. Letting the client know this is a big help to your lender partner and is a critical step. The way I let my clients know this is, Mr. Jones, the first thing you're going to do is start the pre-approval process. Now, the one thing I want to stress about the pre-approval is that you need to get all documents, even the ones you may not think are necessary, to the lender. This paperwork is required on all loans, so you have to gather the information anyway. By taking the extra time to do this first step makes a huge difference in making sure there are no headaches or mistakes later on. I also like to let my clients know that there's a big difference between a pre-qualification and a pre-approval. Just to be clear, Mr. Jones, I want to make sure you understand that there's a big difference between a pre-qualification and a pre-approval. With pre-qualifications, typically no documents are gathered to verify the financial information. Pre-approvals require all necessary paperwork and documentation like bank statements, tax returns, and pay stubs. At this point, if you've established the client does not have a mortgage professional or does not have a strong relationship with one, it gives you another great opportunity to refer your lender partner. I always like to add something that differentiates my lender partner. For example, Mr. Jones, I'd like to refer you to the lender on my team. He specializes in integrating the loan into your overall long and short-term financial plan and will be a valuable resource for you. Does that make sense? And is that okay? Now, if they have another mortgage originator already, many times there's nothing you can do about it. However, it's better on a service level to use your team and is worth trying to persuade them without steering, of course. The way I handle this is by saying, the lender you choose is absolutely up to you. I can only give you my best advice and expertise that is in your best interest to have a team of people who've worked together in the past working for you. You know, I don't want you to think about the lender as a commodity in terms of you looking for the best rate. You have to remember that an eighth of a point difference is really just a cup of coffee at Starbucks. What I want to make sure of is that you're getting the right advice about the loan structure and what's in your best interest for your structure, your plan, and your long-term goals. More importantly, if there are problems in the transaction, if the lender and I have worked together in the past, we can pretty much resolve them before bringing them to your attention. It underscores the team approach I have. When I look at all the transactions over the past few years that have fallen apart, the commonality is not the lender I work with, not the home inspector I work with, and not the attorney I work with. Communication is so important. Remember, you're hiring us to manage this process. You're relying on me to be a professional negotiator for you and for everyone on the team to do a good job. Part of the consultations and communication is not only with you and the lender, but with me and the lender. We cover all the nuances, family involvement, price change differentials. These are items that may not be obvious, but are all very important. Again, it's still your choice. All I ask is that you talk with them to see if they're a fit. As a side note, when it comes to pre-approvals, there's an important rule of thumb I use that is covered on slide 11 of the PowerPoint. If the client is 3 months or less from buying a home, I always make sure they speak with my lender to get pre-approved and get the process underway. My lender will then refer them to the financial advisor for a cash flow analysis next. On the other hand, if the client is 3 months or more out, so that they do not feel uncomfortable having their credit pulled, I like to refer my financial advisor partner first for a cash flow analysis to look at some ratios and make sure they're pulling their down payment from the most tax advantageous account. For clients this far out, it's often more comfortable and the more efficient financial strategy to work with a financial advisor first. When dealing with clients who will buy in 3 months or less, and you're making the referral to your lender, be sure to mention the financial advisor. The way I do this is, Mr. Jones, just to let you know, because it's so important to identify the best way for real estate to fit into your overall financial plan, my lender may suggest speaking with a financial advisor later on. This is all part of our team and our process. By mentioning the financial advisor up front in this way, you drastically increase the likelihood of the client accepting the cash flow cross-sell referral from the lender at the pre-approval consultation. This is a critical step in the Core 7 process. The next step in the home buying process is to discuss scheduling and guidelines for showings. The way I introduce this is, Mr. Smith, the next step in the process is scheduling the showing. We'll compile a list of properties and set a time to view and compare them. When we go out to see them, I'll provide you with showing packets. That way, you have a summary of each property's details to refer back to. You can also take notes about what you like or don't like for each one. Now, there are a few guidelines about showings that we'll go over in detail when the time comes, but for now, I'd like to give you an overview. The first thing to consider is that in this process, everything is negotiable. It's my job to advocate for you, and the listing agent's job to do the same for the seller. That means everything said can and will be used against you in the negotiation by the listing agent. With that in mind, that will help you to make or not make an offer. Some examples are, is there storage? How big is the living room? And what are the neighbors like? The third guideline is not to discuss your current lease situation or residence status with the listing agent. The reason behind these guidelines is to protect our negotiation position down the road. Now, greater detail on preparing buyers for showings is included later in this module series. But during the buyer's meeting, you're showing them the process and only need to cover the highlights. Then, let the buyer know that the next step is making an offer. The way I like to introduce this, and also refer my lender if necessary, is like this. Mr. Jones, when we find a property you like, we'll make an offer and start the negotiation phase. Now, to get the accepted offer, we'll present a copy of your pre-approval along with it. I really want this pre-approval to be strong because that can make a huge difference in the negotiations. I really want you to talk with my lender so that you have the strongest pre-approval possible. Now, the reason I ask like this is there are times when a family member is the lender or the client had a very good experience with a lender before. So understand that you won't get every referral. The important thing is to make a strong effort for your lender because there's a big advantage to everyone when clients work with your team. Next, let the buyer know what's involved in the negotiation and accepted offer stages. The scripting I prefer to explain this is, when we find a property, I'll negotiate to get the best price and terms for you and make an offer. Now, the word terms just means any conditions on the offer, like a desired time frame for closing or repairs you want done by the seller. Once the offer is accepted, we like to have it reviewed by the attorney, so I'll be introducing you to the attorney or escrow officer on my team. This is also the time to move forward with your lender and get any necessary documentation still needed in as soon as possible. Remember the mortgage contingency that we discussed? That is the key date to keep in mind because it's the date you can lose your deposit. All lenders have tight underwriting guidelines that are consistent with the secondary market. This means it's possible that some documentation you provide may trigger the need for other documents to be supplied. We really need to concentrate on this date and make sure everything from paperwork to the appraisal to anything else the lender requires is done on time. Next, you want to address the inspection with your client. Again, it's important to discuss the information at a high level in the buyer's meeting. The scripting I like to use for this is, Mr. Smith, the inspection is basically where we go through the house to get a sense of the condition. Remember the inspection contingency from the offer we discussed? This is where we want to have a reliable inspector review the property. Now, I would prefer you to use my inspector because I know he's thorough and can turn around the report quickly. Do you have any questions? The next topic to cover in the process is negotiating the purchase and sale. Mr. Jones, the purchase and sale is the official document that holds everything together. When we sign this, we would like to be as certain as possible about your mortgage financing contingency because your deposit is on the line. That's why I need to stress again that it's important to get all your documentation to the lender as early as possible and jump through the hoops every lender will require. This is the time where I really negotiate for you about any items found in the inspection. The next aspect I review with my buyers is the process monitoring and updates that the buyer can expect at the next stage of the process. An example of scripting I like to use for this in my buyer's meeting is, Mr. Jones, after this point, there are still a lot of moving pieces. My team, including the lender and attorney, will monitor the process and make sure we stay in touch with you. You will have tons of questions, and we want you to know we keep an eye on all the critical dates for you. Here's an example of some of the things that will happen. First, because you're looking at a single-family home, you need to get property insurance. The lender will be reminding you that you need to get the insurance because you need to provide a binder. But I can recommend the property and casualty agent on my team if you're interested. If the buyer says yes, I introduce my Core 7 property and casualty agent. Next, I explain the importance of monitoring the mortgage contingency. Explain that extensions are common and that having a team to monitor the mortgage contingency is valuable. Next, let's step back and discuss your mortgage contingency date. The lawyer, my lender, and I monitor this very closely. A couple of days before the date comes up, the lawyer and I are in contact with the lender to make sure we're on track to meet the date or discuss getting an extension. If that's the case, don't worry. Extensions are common in the market. In either case, we monitor this closely to prevent your deposit from being at risk. This is one of the reasons, if you choose to work with us, and it's totally your choice, that it's really good to work with a team, because a solid level of communication is already in place. Next, I like to go a bit deeper into the topic of the mortgage contingency. The scripting for this is, now let's talk about the mortgage contingency. Our goal here is a real commitment letter. If there are any conditions on the financing that need to be satisfied, we want to make sure we're able to satisfy them. My team and I stay on top of this and analyze if it makes sense to release the mortgage contingency on the contingency date. When this date approaches, I like to look at my client's situation and typically have a conversation with my lender about whether we would have any trouble satisfying any specific loan condition. My ability to have a conversation like this and being certain I have a 100% honest answer is critical. This goes back to the benefits of working with my team. Now, in terms of documentation gathering, you'll be asked for a considerable amount of documentation all throughout the process. In fact, once you start the process, that's mostly what you need to do, so I want to keep your records up to date. Don't ever assume that the financing process is over just because you've handed in some records. This is the case for two very important reasons. First, some documents are only valid for a specific time period and can expire. Second, sometimes information that is supplied can trigger the need for other documentation. For example, the lender will typically need to verify all large deposits that are not from payroll. This can occur for several different reasons, from verification of the paper trail to the security stipulations in the Patriot Act. Now, remember the airline pilot analogy I made earlier? This is another point where that applies. It can feel like there are a bunch of things flying around at once. But remember, my team and I are on top of each step in the process and will keep you informed. We're here to navigate you through the process, including the bumpy, stressful parts. Now it's time to cover the clear to close with the buyer. In addition to explaining what this is, you also want to cover what the buyer can expect at this point. I like to do this by saying, this is another point where we manage the process and timing. My team and I will be in contact with the lender to make sure we have what is called a clear to close. This means that the bank is ready to prepare the closing package and deliver the money. Now, even though the bank has committed, there may be conditions like repair receipts or bank statements that need to be produced to get that clear to close. But my job is to stay on top of things like this for you. At this point, you'll get a HUD-1 settlement statement with your closing fees from the attorney. Typically, this arrives one day before the closing. One thing I want you to know about this is that when the HUD-1 is first sent to you, the lender and attorney have not scrutinized the numbers and structure yet. There could be some figures on it about the loan structure that don't make sense. Do not panic. We'll make mention of it, and the lender will go through it, comparing it against what they have in the system. It's nothing to worry about, but I do want to let you know that it might happen. Do you have any questions on this? Now, it's time to introduce the Core 7 exit meeting, the walkthrough, and the closing. I like to present this by saying, now, sometime before the walkthrough, because your satisfaction means a lot to me and this process is daunting, we like to have an end of the process exit meeting to go over everything. I have to be honest, often, because the process is so complicated, things can happen that may be viewed as a mistake or that someone is not doing a good job. We like to have an exit meeting to make sure everything was handled to your satisfaction and to address any misunderstandings. I want to ensure you're happy going through this, and so does my team. This meeting is also to give you the opportunity to voice any concerns and to provide a full understanding of the process, because I can tell you, the entire team views this as a long-term relationship. We want to be your resource, not just for this transaction, but any of your needs going forward. Before the closing, we're going to do something called the walkthrough. It's our opportunity to make sure you're satisfied with the house before the closing. Now, I will send you an email beforehand that reviews what to expect with the walkthrough and closing, but I'd like to cover the basics now. At the walkthrough, we'll confirm that appliances, heat, hot water, etc. work, and that all items on the inspection punch list were completed to your satisfaction. I'm going to be there with you, and if any issues are found, we'll alert your attorney and I'll take pictures. Then, we'll have the actual closing at the attorney's office. The seller, the lawyer, and I will be there, and you'll sign the final official documents. Just so you know, after the closing, the transaction will be recorded at the Registry of Deeds, making it official. Next, it's time to cover what happens after the closing. This is a great opportunity to add value because many buyers assume that you part ways once the transaction is finished and that you're no longer a resource to them. An example of the script I use to best describe post-closing phase is, so that's the home buying process. Now, let's move on to what happens after that. We always stay in touch with you and add value. As I mentioned, we want to be your real estate resource moving forward. So this is what my team and I do for you. We'll be sending you items of value, such as information on boosting your credit score and protecting yourself against identity theft. We also have a great referral network, so if you ever need a painter, plumber, or contractor for home improvements, we can recommend some great people who have worked with my team. As I'm sure my lender mentioned, he provides mortgage management. What this means is that he tracks interest rates to make sure you always have the lowest rate the market has to offer. And if there are any refinance opportunities, he'll reach out to make sure you're aware of it. As I mentioned earlier, the Core 7 are the key 7 professionals that work together in the interest of your overall financial goals. If you already have some of these professionals in place, we want to work with them on your behalf moving forward to make sure all of your goals are aligned. We also provide annual equity reviews to help you stay focused on your 2 to 10-year real estate and financial goals now. I know you're buying a home and planning to be in it for a while, so you aren't thinking about the value of your home over the next few years, and that makes sense. However, it's always a good idea to know the value of your home so you can calculate your net worth periodically and have a good idea where the market is in case you ever consider refinancing. I can usually do an equity assessment with you over the phone, too. Do you have any questions on that? Now, after finishing the review of the buying process, it's time to clarify how you're paid. Most buyers don't understand this, so it's important to make sure they know how the process works. The way I explain this is, Mr. Jones, let's talk about how I'm compensated. Now, as your buyer's agent, my job is to represent you and negotiate on your behalf. That's really what you're hiring, a professional negotiator. Even though I work for you, the seller actually pays my fee. The seller and their agent have a brokerage contract in which the seller agrees to pay a fee on the sale of their property. The listing agent then splits their fee with me. As such, the seller pays my fee. It does not come out of your pocket. Next, it's time to address the commitment to work together. At this point, the goal is to make sure you have the buy-in. Now, if you followed this presentation fully, the answer should be 100% yes. If there were any objections, they would have been mentioned in the buyer questionnaire. However, if you feel you still need to pursue getting the commitment, the way I recommend explaining it is, Mr. Jones, since we just met and you were referred to me by one of my very good clients, I'd like to suggest we spend a couple of weeks getting to know each other and seeing properties so we can decide if we're a good fit or not. It's great if we are, but if not, it's okay. We can just shake hands and go our separate ways. You need to make sure that my team and I are a good fit for you, and I need to make sure that what you're looking for is realistic. Based on our conversation so far, I feel that is the case, but we still need to see how we work together. Now, many agents ask their clients to sign a contract up front. Personally, I do not use buyer agency contracts. I never want my clients tied to me because of a piece of paper. However, I do only work exclusively. I want my clients to commit to me, and I want to be in a position to also commit to them. The difference is that I want the clients to want to work with me and my team simply because we do a great job. Do you feel comfortable with that? As the meeting comes to a close, the last topic to cover is next steps. So that's the process in a nutshell. Here's what I'd like to do now. First, as we discussed, I'd like to make an introduction to my lender. I'll send an email copying you and my lender. He'll be reaching out to you to schedule a time to review everything. Now, remember, he'll ask for a lot of documentation. Get as much as you can up front. It's all for your benefit. Now, after the meeting wraps up, you want to copy and paste the lender referral email and customize it as needed. The template is located in the Core 7 Resource Center. Now, continue the discussion by addressing the attorney or escrow officer introduction. I'm also going to send an email to you and the attorney that I work with, so he can introduce himself. We most likely won't need an attorney until the offer is accepted, but I want to make the introduction now, just in case. I do this to make sure my team is connected to clients early on in order to establish a relationship. Then, I'll make sure you have MLS access. That's the property finder we talked about earlier that contains all listings. I'd like you to review properties on MLS. Note the ones you want to see, and then grade them A through D, with the A's being the properties you like best and the D's being properties you don't want to see. Then, I'll show you the A's, B's, and C's. I approach it this way because MLS is an agent-driven database. This means an agent took the pictures and provided the information. Properties never look as good or as bad as the photos, and seeing a variety in person will give you a better sense of the market and help refine our search. Next, we need to schedule a time to start viewing properties. I have openings this Friday at 5 or Saturday at 9. Which is best for you? Now, I want you to know, I feel it will be advantageous to us if you do not make an offer during our first time out seeing properties. I want you to get an idea of price and space, and I want to make sure the lender has enough time to produce a really strong pre-approval. Does that make sense? With the showing scheduled, the meeting can wrap up. Again, once the buyer leaves, the first thing to do is copy and paste, customize, and send the lender referral email. As I mentioned earlier, a copy of this template is located in the Resource Center. Now, in this module, we've discussed setting the tone for the buyer's meeting. We also reviewed the flow of it and discussed how to use the Core 7 Buyer Meeting PowerPoint. Remember, this PowerPoint is also located in the Resource Center and may be customized with your branding and team information. In the next module, we'll focus more closely on the reasoning and technique for referrals.